Hi guys, welcome to my channel. I am Friday Streets. Guys, today I will actually be discussing about GBP USD. You actually see what I posted on GBP. My last video, that was yesterday's video that I did. You can actually check it on my channel at Friday Streets. You see the last video that I did yesterday when I was actually analyzing to you, telling you what will be happening on GBP USD, how it will be booked and all that. So guys, as you can actually see, it's just the same way that it happened today. It is just the same way. I am one of the professional analysts in Africa. I'm one of the best financial analysts in Africa. So you can actually try it out at Friday Streets. Guys, today I'll actually be telling you what I am looking up to, what I looked up to, and how I traded GBP USD today. What was actually my bias and what I was actually looking at. This is a 15 minutes time frame. It doesn't actually mean the time frame doesn't actually count. It is what the market is saying that actually counts in the market. Guys, you can actually subscribe to my YouTube channel at Friday Streets. Hit the notification button so that whenever I post a new video, you can actually see it. You'll be notified whenever I post a new video. You watch it and learn. It's our vision to actually emancipate people from the burden of poverty and all that. So today I will actually be telling you what I am looking at, what I was actually looking at in the morning today when the market opened today. What I was looking, there is a strategy we call power of three. That power of three is accumulation, manipulation, and distribution. That is AMD. That's the strategy. So I'm actually going to be teaching you what is happening, what happened today in the market, and you see it for yourself and understand it. When the market actually opened, there was this this is the Asian. If you actually see my markups, you see that all my markups are the market is just trading in line with my markup. Nothing has actually deviated. The market never deviated from my markup. You see that it is respecting it. That is precision. For the fact that I actually understand how this market is booked is something that is beyond what you actually think. But I want to assure you it's precision, it's consistency. I've been in this market for years. I've been studying this market. I actually dedicated my time to studying this market for years, and I've been doing it. So guys, today let's go in and analyze our class. Today will actually be very brief. Permit me to sip some water. Our class today will actually be very brief, just be analyzing what I was actually looking at when the market opened and what was my intention, what was my plan. You see that I told you is the power of three: accumulation, manipulation, and distribution. That is the three spaces, that is power of three per se. You see, when the market opened, the market was actually consolidating. That is Asian range. Let me go to 5 minutes so that you actually see what I'm saying. Permit me, my network is poor. I'm from Africa. I'm from Nigeria. We have a poor network here. But irrespective of where I actually come from, it is what I am doing that actually matters. It's not where I come from that actually matters. So you see, when the market opened, the market was in an accumulation stage. You see all my markup. This was yesterday's markup. Watch my previous video. I'm going to be dropping link to the video below this video in the comment section. My previous video, that was yesterday's video or day before yesterday's video that I did. I was actually telling you what could be my view, what I was actually looking up to when the market opens up yesterday and all that. So you see that it actually went to that particular point. That's precision. When the market opened, we had an accumulation stage of the market. Accumulation is just Asian range. So when it opened, I told you that the principle at which I traded with today is power of three. That is accumulation, manipulation, and distribution. That is AMD. You see that the market was actually accumulating at this particular stage. It was accumulating, creating a range. So I was actually waiting for the market to break a particular structure. Wherever it breaks this particular structure, then I will know that that they have actually taken up that side and manipulated. Then what will happen? I will look at it from the other range. This is it. The market was accumulating at this stage. Permit me to delete some of these things. Let me delete some of these markups. We are actually done with this, so I can go ahead and delete it. You can actually subscribe to my channel at Friday Streets. Hit the notification button so that whenever I post a new video, you see it. You can also join my mentorship program where I'll hold your hand on a one-on-one basis. I'll teach you what is happening in the financial market. I'll hold your hand, give you an in-depth analysis of what is happening in the market. This YouTube video is just a basic video that I do just to show you the sketch of what is happening. If you want to have an in-depth knowledge of what is happening in the market, then you hit me up. I'm going to be dropping my WhatsApp number below this video. Just chat me up on WhatsApp and I will put you in my inner circle. Just few dollars and you'll be in my inner circle, and you understand what I actually think and what I actually look up to. Just you will be thinking like me as a professional trader. You see, I told you about the power of three, that is accumulation, manipulation, and distribution. These are the major things. This was just actually what I was looking at. Whenever I come to the chart, I look up to the chart. It is this situation of the market that actually determines the principle. I have about 4 or 5 trading strategies that I actually use. So these trading strategies that I use them in line with the market structure. It is the market structure that actually determines what I will do at a particular time. I don't just patch into the market as a professional trader. You don't just jump into the market. If you jump into the market, you'll be cannibalized. You become liquidity. The market makers will use you and pay some orders and use it to make money. That is the psychology. Every professional trader has what you actually look up to. You don't just jump into the market. You look up to something. You have something you are looking up to, and those things you are looking up to, you will not, even if it is one that is remaining, you wait for the market. That is to show that you actually know what you are looking up to. Even in life, everything that you do, whenever it doesn't actually show that thing, you wait. You have patience. That's your sense of your ability to have patience and wait for the market is what makes you who you are. Even in life, your ability to look up to something and say, this is what, have your own vision, have what you actually look up to. You look up to those things, and whenever you don't see those things, you don't just go into anything you intend to do, irrespective of whichever thing that you're doing. I'm talking from the general perspective now, even aside trading. So this strategy, whenever you have a particular thing you are looking up to in the market, if you don't see that thing, you don't go into the market. Like I told you earlier on, I said I was actually looking at power of three. Power of three is accumulation, manipulation, and distribution. So when this market was actually accumulating, I was waiting for the market and saying, okay, where am I actually going to trade? Where is my bias? So when the moment at this stage the market was accumulating, let me use a rectangle to draw. At this stage the market was actually accumulating. Let us pick the Asian highs and the Asian lows. Let us pick these ranges. You see, when the market was at this stage, it was accumulating. So I actually look at it and say, let me block it. So when this market was at this stage, it was actually accumulating. So while it was accumulating, I was saying, okay, let me wait for the market to break out. Anywhere the market will break out, I'll take the other direction, because this is just like Judas was actually trying, when Judas was trying to lure the Christ into a trap that he has actually set up. He made Christ to believe that he was with him, not knowing that he wasn't with Christ. It was just a setup. So the market will actually make you to believe that this is the direction they are going, but you won't know that it is not that direction. They just want to lure you so that you put up your trade. When you put up your trade, you become liquidity. You put up your stop loss. They are saying your stop loss. So at this stage, all these people who put their markets here, let me come. Let me reduce the visibility of this, so that we can get the picture of what I'm saying. So at this stage, all the people who put their stop loss at this point, and we are like, okay, the market is going up, the market is going up, the market, it was going up at this particular point. So all the people who bought this market here believed that the market was actually going up, not knowing to them that the market, it was just a Judas swing. It was just a setup to take away their stop loss. So they put their stop loss at this particular point. You put your stop loss here, put their stop loss here, and the market started going up, started retracing and going up. So at this stage, I was just quietly watching this market. As a professional trader, you don't just jump into the market, you watch the market and see what the market is doing. So when it was moving, when this market was moving, briefly, there are some things that are beyond the scope of this class that you actually tell you. I can actually tell you because this is a free YouTube class. But if you want to know some things that I will actually, because there are some other indicators, there are some other parameters that I was actually looking at when the market was moving. So those indicators, I was actually looking at them and I was like, okay, let me be watching this market, why it is flowing, why the order flow is booking. These are footprints. These are footprints of the market makers, the institutions, the whales, the bears that actually controls the market. These are institutions that have huge money, huge capital at their disposal. So the algorithm, actually, they hide behind this algorithm. They understand how the algorithm that controls the financial market books the market. So they will always follow these footprints and move in line with the market. So if you are a retail trader who doesn't understand how the market is booked, you become liquidity to be cannibalized. You become food for them. So whenever they come for you, they will take you off the market and hit your stop loss, because they can't come to your account, to your broker's account, and take your money. They can't come to your broker's account and take your money. So what they do is to wait for you to put up your stop loss. It is when to be sincere with you, the market makers will not have any business to do with you until you put up a risk in the market. When you put up a risk in the market, it is when you put up a trade, you open either a buy or sell order. That is when they know that they have business to do with you. Their business is to either take you away of stop loss or you are liquidity to them. Let me explain this. They don't actually have the strength, the ability to go into your broker's account to take your money. So they will lure you to either put up a sell or buy trade. When you put up a sell or buy trade that you have something to risk in the market. And at that stage, it's like let me say it's economic war. Let me break it down. Let me put it in that realm. It's economic war because they are here to eat your money. So it's a battle between you and them. It's a battle of the survivor. It's a battle that anybody who survives it then enjoys it. Let me put it now. You have liquidity. When this market was actually consolidating, I told you is the power of three. This is a 1 minute because I'm actually doing a top-down analysis for you. When this market was consolidating, you had liquidity here and you had liquidity on the other side. Briefly, you had liquidity. All these things were liquidity while the market was consolidating. This was liquidity too. So it was like a push. Now, how do you know where the market will go? How do you know where the market will go, either going down or up? These are things, these are secrets that I can't actually tell to you. But then when the moment I saw these things happening, I knew that the market was going to offer liquidity. And when it offered, you have top here, you have top here. This became liquidity. The market retrace. When the market retrace, you begin to see there are indicators here. You know that this is a level 2 trade. This is a level 2 trade already because you have liquidity. Whenever you have double top or double bottom, it means you are at the level 2 of the market. It happens in all the markets, both in the crypto market, both in the forex market, both in the commodity market, both in the stock market. It happens everywhere. There are only two things, like I said earlier on, there are only two things that the market makers does in the market. You see that the market maker is offering liquidity, which is here, this is liquidity that the market maker is offering, or they are hitting people out of stop loss. This is liquidity, they are offering liquidity here. This is one. Then the other thing is that people are liquid. You have liquidity here already. What do? They will have to smash them away. That is manipulation. Two things that the market makers does in the market. So it is whenever they offer liquidity, and smart people out of stop loss, they will go the other way because they know they have eaten people's money at this particular stage. So they don't have any risk here. They don't have anything to come down again. They don't have anything that will make them to come down again. They'll have to move forward. And mind you, whenever you have double top or double bottom, that's level 2 of the trade. That's level 2 of the trade. So you have liquidity here already. As you have liquidity here, permit me to explain this. As you have liquidity here, what does it mean? It means that they will have to take the other way around because they have offered liquidity on both sides. This was liquidity on one side, and this was liquidity on the other side. Where did they take away first? They took away the downside, so they don't have anything here again. They don't have anything, and automatically this is level 1, this is level 2. So it's a push, and it's a 1-2 push range that the market moves on. That is 1, come back, there is level 2. So this is liquidity. They have now, this is liquidity. They smile the other way, so they will go the other way around. So whenever you have a level 1 trade, the next thing is what is manipulation. And there are footprints that the market makers moves on when it is going for the manipulation stage of the market. Just know these things. You always have a manipulation. You always have a manipulation on the other side, which is what we are saying here. This is manipulation. Briefly, this is manipulation. This is manipulation. I will be very brief with this class because I have other mentorship programs, or I have students that actually need to attend to in my mentorship. This is manipulation. This always comes with 3 or 4 candles. The manipulation stage of the market always goes with 3 or 4 candles. You have 4 candles here. So when the market manipulated, what do? They snatched the market away from them. Those who put up sell trade down were going like this. They are not coming down again. They are not going to come down to this particular side again. Nothing will bring them down because they know they have traders that they are trapped here. So they are not coming down again. So they will take away this. This becomes a high. This becomes a higher high. And whenever you have a higher high or higher low, the market in the retail world, it is in an uptrend. So you have a high, you have a low, you have a low, you have a higher low, and you have a high, you have a higher high. The market is an uptrend. It has actually taken away this, and they are not returning again. Whenever they take away this, whenever they take away this and fail to return back to the particular range again, what does it entail? You have a breakaway gap. Hold on. You always have a breakaway gap. These are gaps that this is another class, but then why am I explaining this? I can be talking about some of these things because there are footprints that the market makers move on. You have a breakaway gap here. This is a breakaway gap. Why is it a breakaway gap? It is a breakaway gap because you see that you have 3 candles in this place. The market failed to return to this particular place. Instead, it pushed down and failed to return, and it moved up and never returned to this particular place again. And you see that between this candle and this candle and this candle, these 3 candles, you see that you have a gap here. It's a fair value gap. And you in the realm of trading, you have different kinds of fair value gaps, FVGs. These fair value gaps have names. They have where they are situated. They have their functions. So this fair value gap now is called a breakaway gap. It's called a breakaway gap because it is the foundation. It is the fair value gap that actually causes a break of structure that creates a new high on the manipulation side of the market. So this was actually manipulation, and you have a fair value gap. After the fair value gap, what do you have again? The market will consolidate. It will not return again. After the consolidation, you have what we call an order block, an OB. An order block, at the point of this order block, you always have a measuring gap. This is a measuring gap. This is a measuring gap at this particular stage. It is the other side of the other block. So you have this, you have this, you have a new structure, a higher high. So the market will retrace again. When it retraces again, this particular stage, it offers one leg of the double bottom. This is the stage. Whenever this market returns to this particular place and breaks this particular side, that is when I know that the trend has actually changed. Let me go in deep. Let me go again. Whenever the market breaks this particular structure, that is when I know that the market has actually changed. Then I will allow the market. I have another block here. What will I do? Since I have another block here, I'll pick this particular range from here to here. I'll bring it down. I'll bring it down to this particular place that the market will retrace, because this is a measuring gap. I'll take the distance from here. That is to know where the market will begin to reverse. There are some of these things that are beyond the scope of this class that I can't actually explain to you here, but you can join my mentorship program. When you join my mentorship program, I will actually hold your hand, show you in depth, show you in details what is happening in the market, and open your eyes to some of these realities that happens in the market, how the market is booked. There are certain footprints that the market is booked on. These footprints are the footprints of the market makers, the institutions, the body, the market makers who control the market. So if for you to succeed in the financial market, be it that you're trading crypto, be it you are trading forex, be it you are trading stocks, be it you are trading commodities or indices, or commodities and all that, or even those indices like Nasdaq, Dow Jones, S&P 500 and all that, you need to know these footprints. It's the same thing that I'm explaining to you that happens everywhere. It is fixed. The algorithm that controls the market, it doesn't talk, it doesn't do anything. So once you understand how it goes, the algorithm will become a victim of your own knowledge. You will be able to conquer the algorithm and understand it the way it is put. And I'm willing to actually hold your hand, teach you, show you what it takes to be a professional trader, and make life very easier, very soft for you, bro. You understand? So when the market was going here, I saw this as internal liquidity, and this thing smashed here. The moment it smashed here, because I had known that this is manipulation. Recall that I told you that whenever the market is manipulating, that's the last stage of the market. Whenever I see another block, I know that it is half of the range that it has done. So I'm expecting a manipulation. That manipulation happens on 3 or 4 candles. That's the maximum. So if you count the candle from here, you see 1, you see 2, you see 3, you see 4. This, the last one is 5, but even if the fifth one gives you drawdown, it is not a big deal. So when it was going like this, you had internal liquidity and it smashed the liquidity. The moment it took this liquidity out, I am waiting for a retracement. I am waiting for a retracement. I'll begin to roll, then I wait for the retracement. This is the new trading range, because this particular range, it is from here to here that actually caused a change of structure. It created a new structure because it broke the support here. This is the new trend. So this is the new trading range. So I can actually, from 50% of this particular trading range, from 50% up is at premium, and from 50% down it's at discount. So I can begin to, I can sell at anything above 50%, that's at discount. Just like the psychology of every person who actually, every trader who buys and sell, you buy commodities at a cheaper rate and sell them at a higher rate. That's the psychology of, that's the principle of demand and supply. It is common. So I am selling above 50%, which is at 50%, as is at an encroachment range. That's the center stage. But then I can actually be selling at 70, anything above 50%, 61, 60, 68. Those are the ranges, 70 something. At that range, I can sell anything higher than 50. I can sell. So I was actually at this point, I had armed myself. I loaded one. I loaded one from here. I loaded one. Then I allowed the market to cause a break of structure, because this became internal structure, internal support. Then I allowed the market to cause a break of structure. I've broken the structure. This particular range took away this, and it took away this. So I have serious now. I have a lot of things. I have market structure in my favor. I have momentum in my favor, because the market has actually shown me that I have momentum in my favor. I have market structure with me, so I begin to retrace. I begin to wait for the market to retrace. When the market actually broke this structure, I waited for the market to retrace. The moment anywhere it is retracing, I don't give a fact about it. I will just hit it like mad, like mad. I'm going to attach that my trading today, my trading result at where I traded and how I was actually to make money from all these trades. You actually see it. I will even include the execution and all that. So when the market was doing all this thing, I started looking. So it was returning. I knew that it's returning to this particular structure because I've seen a one, two push. So I knew that it will return to this to cover break even, which is one, two leg. So it returned to this place. I loaded. This was internal structure. So this was internal structure. So when this market broke this particular place, I knew that we are expecting a pushback. When it pushback, I put it again continuously. It's a continuous cycle. Then you had this as liquidity. This was the consolidation. This was the consolidation phase of the market. Like I told you, power of three. When the market consolidated at this particular stage, and I saw this as double top. So when I saw this as liquidity, and the market went off and manipulated. I knew that the time is up for this market. And when it returned to this particular stage, I knew that I have this to play with. So when it returned again, I had nothing again but this internal liquidity to deal with. This liquidity and this liquidity. All these things became liquidity. So and since then you've actually seen that the market has been going down, and it will keep going down like this. It will keep going down like this until you see you get to level 2 again. You get to level 2 again. Level 2. That is when the market will stop. Where is level 2? This is liquidity. So look for a fair value gap. Let me check and give precision. Give you where the market will go exactly. You see this. This is level 2. So this market will return to somewhere here. You see it. When it returns to somewhere here, that is when you see a push again, a hard push again. So for now, the market will be going down. GBP USD will be going down. That is what makes you a professional trader. Subscribe to my channel at Fridays Trades. When you subscribe, you hit the notification button so that whenever I post a new video, you actually see it. I am one of the best financial analysts in Africa. I I I also offer a mentorship program where I hold your hand and teach you what is happening in markets, teach you in depth and open your eyes to reality, make you free from financial stress, make you free from inflation. This is the only skill set that everybody actually needs now in the face of inflation and all that. Guys, I love you and I'll always be there for you. I'll always be there for you to make you free. Guys, love you. Peace out.